Hi everyone, myself Sanjana Umrao, and in this video I will explain what are the different types of corporate actions and how they can impact investors. So, firstly I would like to tell you what are the corporate actions. Corporate actions are the events that have a significant impact on the company's finances or the operations. They can be initiated by the company itself or by any other external factors. So, some common types of corporate actions in the share markets are dividends, share buyback, rights issues, mergers and acquisitions, and recapitalization. So, what is a dividend? Dividend is a payment made by a company to its shareholders from its profits. And share buyback, it is when a company repurchases its own shares from the shareholders, and this is done by offering a buyback share at a price which is usually higher than the market price. And the next one is rights issues. A rights offering is an offer by a company to its shareholders to buy new shares at a discounted price. And the mergers and acquisitions. A merger is when two companies combine to form a single company, and acquisition is when one company buys another company. So, moving forward, I would like to tell you in detail what is a share buyback and how it affects the investors. So, let's get started with the share buyback. So, share buyback is when a company repurchases its own shares from the shareholders, and this is done by offering to buy back the shares at a price which is usually higher than the market price. So, HDFC Bank is doing a share buyback for a number of reasons that benefit the shareholders in number of ways, and some of these reasons are the increased EPS, return of capital, signal of confidence, and the increased ownership percentage for the existing shareholders. So, as mentioned earlier, share buyback can increase EPS by reducing the number of outstanding shares, and this can lead to a higher share price and increased shareholder returns. And return of capital can return the capital to the shareholders in the form of cash or in the form of shares. And signal of confidence, share buyback can be seen as a signal of confidence by the company in its future prospects. This can lead to the increased investor interest and higher share price, and the increased ownership percentage for the existing shareholders. Increased shareholders who choose not to participate in the buyback will see their ownership percentage increase as the total number of outstanding shares decreases. And moving ahead, the HDFC Bank has done share buyback 4 times in the last 10 years. So we'll see them one by one in detail. Firstly, in 2011, the company repurchased 15 million shares at a price of rupees 1000 per share. And the next it did in 2013, in which the company repurchased 20 million shares at a price of rupees 1200 per share. And next in 2015, the company repurchased 10 million shares at a price of rupees 1500 per share. And the next it did in 2021, in which the company purchased a huge amount of share, and that was 25 million shares at a price of rupees 1400 per share. This resulted in a total buyback amount of rupees 35 billion, and the share buyback was done to improve the company's EPS and return capital to the shareholders. So there are some evidences which suggest that it was beneficial for the company to do share buyback. So it was in favor of them. So firstly, the one effect was that the HDFC's bank EPS increased significantly in the years since it did the share buyback. In 2021, the company's EPS was rupees 66.4, and the HDFC's bank's capital structure also is strengthened in the years since it did the share buyback, and the company's share price also increased from rupees 300 in the year 2020 to the rupees 450 in the year 2021. Overall, it is clear that HDFC's bank's share buyback was a positive corporate action for the shareholders, and it has the potential to increase EPS, return capital to the shareholders, and signal confidence in the company's future. So, it is beneficial for the company to do share buyback. And the next, if we look into the some risks and considerations for the investors, so the first risk is that possibility of overevaluation or underevaluation of the shares. Share buyback can sometimes lead to the overevaluation if the repurchase price exceeds the stock's intrinsic value. or under-evaluation if the price is below its true worth, and the impact on dividend payouts and future cash flows. By utilizing funds for the share buyback, companies may have less cash available for the dividend payouts or for the future investment. And the next one is the potential dilution of the ownership for non participating shareholders. So, the non participating shareholders may experience dilution of their ownership percentage if the repurchased shares are not retired but retained by the company. And the next one is the market reaction and volatility during the buyback period. So, the share buyback announcement can create a short term market volatility, and investors should be aware of the potential price fluctuations, especially during the buyback period. So, these were the risks and the considerations associated with the share buyback for a company. And next, moving ahead, we'll look into the potential impact of the HDFC's bank's share buyback on EPS, capital structure, and share price. EPS. HDFC's bank's share price is expected to increase its EPS by reducing the number of outstanding shares. And the next is capital structure. So the HDFC's bank is expected to strengthen its capital structure by reducing its debt levels. This is because the company will be using cash to buy back its shares, which will reduce its debt levels. And the share price. HDFC's bank's share buyback is expected to increase its share price. This is because the share buyback are seen as a signal of confidence by the investors, and the investors are more likely to buy the shares of the companies that are buying back their shares, which can lead to an increase in the share price. So these were the potential impact of the HDFC Bank's share buyback. And next, we conclude this video with a positive cooperation action for the shareholders, and it has the potential to increase EPS, return capital to the shareholders, and signal confidence in the company's future. So next, my friend Bharat Reddy will be proceeding this video with the dividend payout, one of the corporate action. So he'll be telling about the dividend payout. So I just end it here. And thanks.
That's a great explanation by Sanjana about share buyback of HDFC Bank. And now my name is Bharat Kumar. Now I am going to explain about HDFC Bank's dividend payment. Firstly, what is dividend payment? A dividend payment is the distribution of company's profits to its shareholders. Dividends are usually paid in cash, but sometimes in company stocks too. Here are the different dividend types. First one, cash dividend, and then stock dividend, and then scrip dividend, and then property dividend, and then liquidating dividend, and then bond dividend, and then special dividend. But most of the time, company prefer to give its dividend in the form of cash dividend or stock dividend. Let's have a brief overview of HDFC dividend payment. HDFC is one of the India's leading housing finance companies. It offers a range of financial products and services, including dividend payments, to its shareholders. Dividend payments are a crucial aspect of investing in stocks. They provide a steady stream of income for shareholders, allowing them to participate in the company's success and earn returns on their investment. Today, our goal is to help you understand how HDFC dividend payment works and how you can maximize your returns. And here are the some important dates. So whenever a company is declaring a dividend, there are many dates linked to them, and they are the first one is declaration date or announcement date, the date on which board of directors announce the dividend with its amount. And the second one is recorded. It is the date on which the investors should be in the records of company shareholders if they want a dividend payment. And the third one is ex-dividend date. The ex-dividend date is the date which is set 2 days prior to the record date. Why it is set to 2 days prior? Because whenever you buy a share, it takes T plus 2 trading days to get listed. So that's why it is 2 days prior to the record date. And the fourth one is dividend payment date. It is the date on which dividend is paid to shareholders. Now for HDFC Bank, the respective dates for the year 2023 are the declaration date is April 15 and the record date is May 16 and the ex-dividend date is May 14, which is 2 days prior to the record date, and the dividend payment date is June 1st. And here is the history of HDFC Bank's dividend payment. HDFC Bank has declared dividend worth 19 rupees in the latest quarter. HDFC Bank has a history of paying dividends annually as we see in the table. It usually announces dividend following its annual general meetings. HDFC Bank has historically maintained a reasonable dividend payout, indicating that it distributes a significant portion of its profits as dividend to shareholders. Over the years, the bank has typically increased its dividend per share, reflecting its consistent growth and profitability. HDFC Bank's dividend payment have been relatively consistent, reflecting the bank's focus on shareholder value and its ability to generate steady earnings. Let's understand about HDFC Bank's dividend history briefly. HDFC Bank has a rich history, starting in 1994 as the first private sector bank to be established in India. HDFC Bank has been known for its consistent and significant dividend payments to its shareholders. The bank's dividend history typically reflects its strong financial performance and commitment to creating value for its investors. Here is the general outline for HDFC Bank's dividend payment. Over the years, HDFC Bank has consistently rewarded its shareholders with attractive dividend payouts, showcasing its commitment to shareholder value. And next, we have understanding the dividends. Calculating dividends involves considering the company's net income, number of shares outstanding, and dividend per share. Companies that increase their dividend payment year after year are usually less volatile than broader market. Some companies also respond to inflation by raising dividend payments, and the steady income from dividend can help to increase stock price. Receiving dividend has several benefits, such as providing a regular income stream and indicating the company's financial health and stability. Dividend also impact shareholders by influencing the stock's price, attracting investors, and fostering long-term loyalty. And next we have, do you know what are the factors contributing to HDFC Bank's consistent and significant dividend payouts? There are several factors, but out of those, few factors are profitability, regulatory requirements, market condition, and shareholder expectations. Let's have a brief overview of factors affecting HDFC Bank's dividend policy. HDFC Bank's financial performance and profitability are key factors in determining its dividend policy. Regulatory requirements and guidelines set by RBI and other authorities also impact the bank's dividend decisions. Market conditions such as interest rate, inflation, and economic factors plays a role in shaping HDFC Bank's dividend policy. Additionally, HDFC Bank considers shareholder expectations and feedback to ensure its dividend policy aligns with their interests. And here is the latest dividend payout history of HDFC Bank. If we see here, for the year 2023, the dividend per share is 43.60 and the dividend yield is 1.7% and dividend payout ratio is 30.9 and the face value is 2 and the dividend is 2200, and this is the latest dividend payout history of HDFC Bank. So now I think you had a great understanding about dividend payment HDFC Bank. So let's conclude this. HDFC Bank has consistently provided dividends to its investors over the years, showcasing its financial stability and commitment to shareholders. This regular dividend payment reflects the bank's ability to generate steady profits and its dedication to sharing those gains. This reflects positively and bank's financial stability on its commitment to rewarding its shareholders. And that is all about corporate actions like dividend payment, share buyback, right issues, buyout. Thank you. Thank you all for watching.